Do you want to bring Ted Thatcher into the conversation? Joining us this morning, president at Bright Lake Wealth Management. Ted, great to see you. Always great to have you with us on a Monday, especially a Monday that we have a sea of green going across the board. But I'd love to get your thoughts on the volatility that we saw last week and that we've continued to see throughout the year. I mean, it seems almost like vol is the name of the game right now. And how do you position around that?
Yeah, Marla, it's incredible. Already in the month of January, the VIX has spiked above 22 different times. Yeah, we mentioned last week the metals were still going through their flash crash. Anthropic released its, Claude plugins, and that caused software to again sort of be questioned and re-rated. We got those big earnings releases from the mega caps, Facebook, Google, Amazon. And we find out, of course, that their AI capex is just way above expectations on top of already huge AI capex budgets. And so what has driven so much growth, those mega cap companies in 2025, now has reason to be questioned. And then, of course, after Amazon's dump on Thursday, we see the Dow at an all-time high over 50,000 on Friday. And so the market is trying to find some, I think, firm footing. And with all the headlines, it's having a hard time doing it right now.
It certainly is. And some of it's even hard to make sense of, or find any sort of consensus opinion on. But you mentioned the AI spend, certainly was in focus, has been in focus the past 2 weeks with the big names that we got and these massive capex numbers. Do you think that a lot of the volatility that we're seeing, or most of it, could be tied to all of the uncertainty around this AI spend and liquidity? Or is there something deeper sort of lurking in the macro backdrop?
The way I look at this specifically, I do think it is the market having to process what really is the largest industrial build out in human history. We are going through a transformative time, and you can hear the commentary from Jensen and Zuckerberg and the other CEOs, Sundar, talking about just what level of transformation is happening right now. And the markets, because the price tags are just so big, are having to digest that. And we do know that in 2025, we saw how much that concentration really did affect the markets. And so when the street has reason to question that spend and ask, hey, hold on, we are spending incredible numbers here. Are we really going to get the ROI, out of that? That's, I think, really what's caused the VIX to spike up in the way that it has this last week. Obviously, I know we've seen a whole bunch of green this morning. I think that it is digesting that, and hopefully we can turn the corner and talk about the fundamentals, the ROI that is on the horizon.
And so as we look at this and on these names, I haven't gotten to talk to you since we've got these names and these massive capex numbers and some of the reaction we saw to them. Obviously, in a few specific instances, there were some misses that are the reasoning behind some of the downward price action we saw. But in other names, it seems just sort of generally divided, whether or not we saw a positive reaction or a negative reaction. And in some cases, it was great, wasn't good enough. And in other cases, it was one metric seemed to be enough to move prices higher. What do you think right now is really differentiating the winners from the losers here when these big mega cap names are putting up these massive spends and arguably positive earnings for the majority?
Yeah, we look at Facebook, they beat on their earnings. We looked at Alphabet, it beat huge on its earnings and still really wasn't getting the reward for it because of the spend we're talking about. Let's start with Meta, though. I don't think that there is a company out there today that is using and getting the ROI out of AI in the way that Meta truly is. It's outstanding what they have done and already implemented in their ad platform. We saw ad impressions up 18% in Q4, huge earning beat because of it. And so I think that as we turn the corner, outside of the surprise release of the spend that we're seeing with a company like Meta, just that ROI alone, I think, is going to give the street a little bit of calm once it processes through. Now, in the case of Google, they've had obviously a huge run since the middle of last year. And of course, again, huge earnings beat, but a huge capex spend. And so at the end of the day, I think that the conversation does come back to the ROI on these things. And in the case of Meta and in the case of Google, we are seeing that. I mean, even search revenue is up, I think, 18 or so percent. A huge beat regardless of the exact number. And I think that is what Sundar is going to be pointing to. On the Amazon side, though, another huge company, of course, that has spent a ton to get their AWS services, stood up to stand under the AI, demand that exists today. What I like about Amazon and why I think it might be a good buying opportunity for investors is they have the same type of distribution, although in a different way, that we could relate or compare Facebook to. Think about how many daily active users are purchasing. I don't know about you, but I have boxes show up at my door every week, of course, from Amazon. And so they're going to, I think, be able to turn that AI capex spend into, greater efficiency on their selling platform, of course, Amazon.com.
Oh, Ted, I love that you think it's just a week for me on Amazon. I mean, I'm never near daily delivery person. I use that for all of my major.
I don't want to admit it, but I'm with you.
Yeah, right there. I mean, convenience, right? We don't have time for it. Let's talk about the software sell-off, too, though, because this is such an important thing here. You mentioned Jensen Huang. I mean, he's really doing everything he can to sort of prevent this massive pivot away from software. He even went so far as to say that the AI replacing software companies was illogical. I mean, that was the word that he used. Do you agree with that sentiment? And how does SaaS survive this transition here?
Of course, it's hard to say anything super negative about Jensen. I respect him as a CEO. Obviously, he's built, I think over the last several years, their market cap has increased, if you average it out, almost $100 billion a month for multiple years now. He's an incredible mind. That said, of course, there's a lot of incentives there for him to speak highly of the software that runs on all their NVIDIA servers. The way I look at SaaS right now isn't so much this black or white, software is going away entirely and it's all going to be replaced by, agentic AI. It's more about where the value capture in the stack ends up flowing to. So much of the valuation, in a company like Salesforce has been this huge long-term 30x multiple on earnings. And, over the last year plus, we've seen that come down. And so, the way I see this crash down for SaaS isn't so much that it's, a surprise. I think it's news that has kind of been on its way. The valuations on SaaS have come down. And so are the companies going away? No, I don't think that. I just think that the value is also going to be found in other areas. It's really hard for a SaaS company entirely to be able to speak to all the other, SaaS software that we see in businesses every day. What is much more useful, as I see it, for a business is to have something that is more centric, that can talk to Notion, that can talk to your Slack or your Teams profile, that can talk to your CRM, and bring it all together to be useful. And so just that natural flow of value, I think, will bleed a little bit from the software side over time.
Ted, always a pleasure to have you on the show. Great insight as usual. Ted Thatcher, president at Bright Lake Wealth Management. Thanks again for being with us this morning.